made as far as private investment is concerned, and it has gone nowhere over the last several years. So do you believe that, you said that you expect this year to be a washout year, but do you expect private investment to start to pick up, given where things currently are, at least at some point next year?
Yes, I certainly do. I would want to point out many of the reforms that are being, launched. For instance, take agriculture, for instance. The APMC reforms, together with the Essential Commodities Act, those provide incentives for, investments to come up in food processing, in storage infrastructure, in warehouse infrastructure. So that's one area that I would expect investments to happen. In the manufacturing sector, one of the key aspects that has been highlighted to us has been some of the inflexibility on the labor side, and the reforms that are actually being undertaken on both by states and also by the center will thereby also unleash some of the incentives for investments to happen in the manufacturing sector, together with the incentive to try and actually attract some of the companies that are leaving China. So I do expect from next year investments to actually pick up.
I want to pick up on a point that you had highlighted in the economic survey in light of the government's attempts to also become a part of the global supply chain, etc. You had said that we don't need to be paranoid about foreign trade agreements. Now, we've just seen Vietnam ink an FTA with the EU. India has been reluctant, whether it's with the RCEP or negotiations with the EU as far as taking the FTA forward. Do you believe that this is going to hurt us in the medium to long term if we don't move aggressively on this line?
Look, Sherin, you have to actually keep in mind here that every country, after the global financial crisis, has been looking at these aspects of trade, from both the economic efficiency angle as well as the interests of their domestic stakeholders. And I think India is not an exception to this. What we found is that overall, when you control for other factors that influence trade, FTAs have not necessarily been that hurtful to India. And therefore, this is an avenue that, we can continue pursuing.
Okay, one quick question on the revenue shortfall, and we've just seen the numbers coming in as far as GST is concerned for last month, coming in at about 49,500 crores. Direct tax is also missing the targets yet again. Now, what is now the estimate as far as the revenue hole that the government is going to have to deal with?
As of now, Sherin, the additional borrowing that we've announced captures our assessment at this point in time, and that caveat is very important because we will continually recalibrate. So the additional borrowing we've announced gives you a sense of the shortfall that we expect, both on the tax and the non-tax side, and also possible, decrease in the denominator, which is the GDP number, and thereby an increase in the fiscal deficit. So it captures that. I think there is no question that there will be a decline in tax revenues, both from the corporate side and from the and also from consumption. I think it's very hard to say at this point what might be the actual estimate, but I would go by the additional borrowings for a sense of the decline in revenues, both from the tax and the non-tax side, but remain cognizant to continually recalibrate.
Okay, may I drag the conversation back to my favorite financial sector, Dr. Krishnamurthy? By when can we see the first PSU bank getting privatized?
Lata, in general, these aspects of actual implementation are best left to the particular ministries. Okay. My office is one that is in charge of actually giving the ideas, and I would therefore say that these specifics are best addressed to the secretary concerned.
Okay. The other part of the fragility of the financial sector is obviously the NPA issue and the sale of the existing stock of stressed assets. loans. The bad loan idea has been mooted. More lately, the fashion is that since Reserve Bank is rewriting the loan assignment rules, that AIFs would buy bad assets. Can you enlighten us? Will government set up any AIF? Or have you given the idea that AIFs be allowed to buy stressed assets directly?
See, Lata, if you think about it conceptually, we have 28 ARCs. And we have to ask the question, and they are supposed to be acting like bad banks. Why is it that, the sale of, let's say, of bad loans has not happened to the ARCs? The reason that has not happened is because, when a loan is sold, there has to be a haircut that has to be taken.
Yes.
And when the haircut is taken, that then basically gets effect, shows its effect on the P&L. And so these incentives, whether it's in, new AIF structure or an ARC, the existing banks will have to sell their bad loans, in which case they would have to take the haircut and thereby the P&L effect. So without being able to take care of these incentives, for selling the loan, with a haircut, I think, a new structure may not necessarily have the potency that we desire. So fixing some of these aspects is quite critical before we actually think about, the AIF structure.
Oh, I can go on half an hour on this issue itself and look for some solutions from you, but I guess we'll run out of time. The AGR decision is also expected from the courts. But Dr. Krishnamurthy, just wanted to ask, Dr. Subramanian, just wanted to ask you about what Shreen was referring to the FTA that Vietnam has signed. What's holding us back? Is it a fear that European goods may flood Indian markets and hurt nascent and even mature industries? Is it, what's holding back from the FTAs? Is it Atmanirbhar?
See, I think one aspect that has been, seen is that any FTA, there is also it involves a give and take. It's not just about their products actually coming in and sort of flooding our markets. But at the same time, we also have to make sure that our strength, which is services sector, for instance, when we do negotiate, we actually take that into account and ensure that we get enough in return in areas where we have strengths. And that's the way the FTAs have to be seen. So from that perspective, I think there is opportunity. We've written in the economic survey that one of the things that India needs to do is to be very focused on particular categories for its exports, and also target some of the the more advanced countries for its markets, because that's something that countries that have actually expanded their exports have repeatedly done, and there is important learning from that. So in that sense, I think we should be looking at it not from a one-sided perspective of what might come in, but from a from both sides actually, and what is it that we can gain from such FTAs.
Absolutely. Well, let's hope that the various line ministries are listening to what you have to say, especially when it comes to moving forward with FTAs. Dr. Subramanian, always a pleasure. Appreciate you joining us here on CNBC TV 18. We could have continued, but unfortunately we're out of time. Thanks very much for joining us. That's the Chief Economic Advisor. We are, of course, standing by now for the AGR announcement that is going to come in from the Supreme Court. Remember that hearing is just going to start shortly. 12:30 is when it is expected to be taken up by the bench led by Justice Arun Mishra. The markets are nervous ahead of that decision. If you take a look at what the Sensex is doing, it's down by about 1% at this point in time. The bank stocks are also under pressure. And of course, the telecom stocks are also waiting with bated breath to see what the Supreme Court does do on this matter. There is a significant outstanding as far as the AGR dues are concerned. Whether there will be a staggered payout, that decision was something that the DOT had proposed to the Supreme Court. That matter will be taken up today. Our colleague Ashmit Kumar is tracking the action, and we will return with more on that in just a moment. A break. We're back in a moment.